All right, guys, good morning. Good morning. All right, we got just a small group so far. Maybe we'll give it another minute. For those of you, just bear with us here. Oh, let's see if we can get 10 or more. I see a couple of regs, a few members. Monty Crypto is going to post that around here. So maybe we'll start when we get around 10. So just a couple more. We'll get rolling here. I want to keep you guys long. It should be shorter today than on an alt day. We have 7 or 8 charts here, but some solid work from some of our best members here. So there should be, for those of you with, as I will say, with dry powder looking for setups, this is a good place to find them, because what you're going to see here will be teed up beautifully. I mean, as I've often said, I get many trade ideas from members. There's 10. Okay, let's go ahead and start there, and we'll just, as others join us, we'll just accommodate that. And of course, this all gets recorded, so we post it later in the day. So if you don't have time to stick with us, it'll be available for your viewing. So format here, I don't see anyone that maybe hadn't been here, but just for a quick review, just what we're doing here, members post up the assets that they're tracking. Then we kind of review it. 2 reasons. One, it gives me a sense of how they're progressing with our material. And I'm seeing that we've got a couple of long-term members here. So the content here should be very good. And additionally, as I was just saying, it's a great opportunity to look for trade setups, because you've got hundreds and hundreds of people scanning the market looking for the same type of setup that would fit with our methodology. So with that said, we'll start here. Now, interestingly, I've got the first one up from one of my lead senseis, and I think he's doing it here just for the educational benefit. So this is the 4-hour of the S&P. Now this is the algorithm that we continually are talking to you about, that as the dominant algorithm in the market, right? So you'll see me, this applied from anywhere from Bitcoin to all of the alts to any asset for it. It doesn't matter, right? This algorithm is running all the time. They never turn it off. It runs, in the traditionals, it runs 24/5. In crypto, it's running 24/7. They never turn it off, and it's on every time frame. So this is a great example, and I'm sure this is why Sensei Tudum is posting this here for you guys. I want this to just lock into your brain. This is the first thing you have to identify. What did this algorithm do last? And where are you likely to find the opposite side, right? So he's actually left out a few here. I went back a little further in time just to show you how pervasive this is. Well, right off the bat, I can see another one right here. Right? So I mean, you can just keep going here, right? There's one right there. I can just look at it and tell you that's going to be a 50, right? So there's 50, gets third target to the tick. I probably go back even further. Looks like that probably this last little pivot here get hot. I mean, you should do this for yourself. There it is, right? So we get right into the pocket here. And see, now, how do you identify that it's an algorithm? Right? Because a 50% retracement, that's not rocket science. That's nothing new to the markets, right? That's been around since long before there were computers, because it was easy for the floor traders to calculate. Same with the golden zone, right? Oh, we're down 2/3. Okay. I got a feel for where we are. It was easy math for them. So it's somewhat, it always, I find it, even to this day, you would think it would be so much more complicated. And certainly there are, God knows, all sorts of arbitrage, highly complex, high frequency trade algorithms that are running in here, but we can't track those. This one leaves a constant series of footprints. The other thing that you'll often hear me say is they don't care if they get stopped out on one side, because they will get into a series like this where they are literally printing money. Now, look at this. So here's our, we're going back. Here's our double bottom in November. And then we get the first swing. Now, this is you probably have them on smaller time frame, but out here on a 4-hour, this is the most shallow retracement you get. So you don't have it here. It's not going to be at every pivot. It looks like it was pervasive on the way down, but I don't have a deep enough retracement here to give me anything. So all I've got is that pivot to work from. That's the lowest pivot, which is where first place I go. So I go, oh, okay, that looks about right. I mean, it looks, this could have been here as well, right? So there's a 50, look. Right, it's just nonstop. Now look how much money did they make on the way up here? Here's 1, 2, 3, 4, 5, 6, 7 in a row. Now you can be absolutely certain they're not trading one lots. So, this is such a cornerstone of our methodology that I've shown this so many times over how long have we been doing this, Monty? 3.5 years. I've shown this at least 5,000 times, if not more, because it's on every chart, on every time frame, always, right? It's always there. Again, they never turn it off. So you just have to identify what it did last. So it doesn't matter what time frame. This could be a 1-minute chart. It would look exactly the same. Right? It's just one after the other, after the other, after the other. You have to know. So first, what time frame are you trading on? Oh, you want to trade on the 60-minute? Well, you better know what happened on the 4-hour. Oh, you want to trade on the 4-hour? Well, you better know what last happened on the daily. You're just absolutely walking through a minefield with blinders on if you don't know what this algorithm did last. Because if you don't, you'll buy right into it or sell right into it. So, for example, would you want to sell right here? So we had this big turnaround this morning here. A 4-hour won't show it here, but we had the huge up off of the CPI data, and the market just completely reversed. Now we're coming right into the buy zone where we know we don't have to wonder about it. We know an algorithm is going to fire there. Now, just because it fires doesn't mean it couldn't break, but you wouldn't want to sell into that aggressively. Would you? Right? I mean, that's kind of a rhetorical question, right? I mean, obviously, you wouldn't want to sell it right there. I'd like to think that that's just self-evident. 1, 2, 3, 4, 5, and what makes it tricky? Now, his coloring is a little bit different. His 50 is this light blue here. That must be his 38. So his colors are a little bit different. But part of the challenge is you don't know whether it's going to be a 50 or a 618. Or a golden zone, I should say, because what you'll note here is that not one of these is actually the 618. They all go into the golden zone. If they go down towards the 618, what they do here, and it's I've been trying to educate people for a couple of years on this. You don't want to put your stop right at the 618 because that's what the novice trader comes in and he read a book and he said, okay, well, if you want to put your stop on the 618 because if they take that out, trend change. Well, that's not reality. That's not how this algorithm functions because what they do is they run the stops at the 618, so I guarantee you somebody was bought somewhere, had a stop there, or more equally as probable is that somebody sold it right at the 65 because they thought, oh, hey, we broke the 618, so it must be going down. And the reason I know that happened is because look at the reaction that comes out of tapping that 65. It's literally a moonshot straight up. Why? Because the algorithm is driving that, right? They start at the 50, they'll defend all the way to the 65, right? And that's 65 to the tick. And then it's just a lunar shot. So the guy who was there going, wait a minute. I was told not to put my stop below I was supposed to put it just under the 618. So I'm going to give it 3 ticks from the 618. And they just get absolutely bent over. And that's just so demoralizing psychologically to the trader who's like, man, I had a pretty good idea that was going to go. So look here, we've got all the ingredients here. We've got a retracement that comes in a 3 and it goes right to the golden zone. After 3.5 years, I like to think I don't have to harp on this as much as I do. But this is just such a great example. I'm not doing this to satisfy my ego. I'm trying to teach you guys here. Look again, right? Not the 618. Right, goes just a few ticks below, right? So this is essentially what's happening here. It's a liquidity grab, right? So they can grab that liquidity, right? So the short sellers, breakout, whatever, right? They just grab all those shorts there and just absolutely destroy them. So then it becomes, once the short sellers are panicked now, oh God, it looks like it's turning around. Then they got to cover, and that's part of what drives it. Here's the reaction at the target, right? So you don't get a massive reaction there, but you got one, right? So they're taking profit. Now, remember, this is an important note. Hitting the target is not a sell signal. No, right? That's important that you make that distinction. That's not a sell signal. Now, often you might find something like that as you did here, where we've got a target being hit from a lower, well, this one. No. His colors are a little different than mine. It must be, let me put mine on there. A second target. All right, that's the difference, right? So I'm a little off by his coloring. if you find this in conjunction with something else, right? If you were hitting so here you wouldn't want to have been selling at the first target. Where's the reaction? Second target, right? That's the negative 618. Well, so if you were looking at that, we know pulling from here to the golden zone here, we know that's going to be a 1618. So maybe this is a 1, 2, 3, 4. Right, all the way down here we come down. Oh, golden zone again. Now we just did it. Now this time it's a 50. Right, that's what makes it difficult. We can't know whether it's going to be the 50 or the 618, right? Or the golden zone. You can't know. So you got to watch for it. So often what you'll hear me say is, if you don't pick the turn, wait for the first pullback, because at this point, we know the algorithm responded there. Now, of course, right? It could just do that. Obviously, right? There's no definitive way to say, oh, well, I know for sure it's not going to go to the golden zone. So thus, here's your stop, right? If it takes it out, you're better. See, it's much wiser, my opinion here, rather than move your stop down here. You want to take the loser here. Take it. You got to be able to take a loser. It can't be, oh, I'm just going to move my stop down, because the second you do that, well, first, the second it enters your mind and if you reach your hand for the mouse, you got to stop yourself. That is probably the single biggest error that all traders make. Oh, all right, it's probably going golden zone. I'll just move the stop down. Right now, look at the difference in the risk parameters. Right, from taking the small loser here, you tripled it, at least. You just remember the simple secret to trading is don't allow the big loser. And the only way you allow a big loser is you do it to yourself. That's the only way it happens, right? If you push your stop here like this, well, you better have done the math and make sure you've got the account size to be able to absorb that drawdown. If you were smart about it, even regardless of your account size, because the account size might affect the size that you're trading here, as soon as you move it, I can almost guarantee you the market will blow right through it. Right, because as you've heard me say this many, many times, the market has an unbelievable ability to punish mistakes. It's hard to explain. I just can promise you, for 30 years of doing this, the first mistake is moving the stop. Now it'd be easy for you to compound it. Okay, so maybe here, oh well, okay, I'm gonna average in. So I'm just gonna buy more here, right? So now you're compounding the error. I can almost guarantee you it'll do that. It's just don't put yourself in a position where you allow it to happen, because it's a self-inflicted wound, which makes it all the deeper, because psychologically that's going to eat you alive, right? If you do it, here's even worse. If you do it and you get away with it, even worse, because now you just reinforce the bad habit. So the next time that happens, oh well, I've been through this before. I'll just double in. I'll just average in at the golden zone. Now where's your stop? Next golden zone. Now the stop's here. Right now, you put yourself in. Now you're in the trader's prayer, right? Oh, please God, let me get out of it this one time. I had a guy write me the other day, and he wanted detailed time frame, and like, how long would it take me to go from a white belt to a black belt? How long before I'm profitable? All sorts of questions about the implementation of our methodology. Absolutely no questions about money management, no questions about how to allocate his capital. All he was focused on was the methodology. And I wrote him back and I said, hey, man, listen, man, depending on your time, what amount of time you have to allocate towards the material, I mean, shit, you could do it in 90 days if you did nothing else. But what I was trying to convey to him is your focus is on the wrong part of it. The methodology, the TA, as you'll often hear me say, that's the puzzle solving. That's the fun part, right? Where you make that distinction between an amateur and a pro, or someone who's treating this like a business as it should be treated, is how you approach risk. Are you cavalier about it? Oh, well, it's a retrace. Go ahead. Well, something in here. Let's just buy it here. Well, if I hit that, look how much money I'm going to make, right? What is the pro? The first thing that enters the pro's mind, if I'm wrong, how much am I going to lose? That has to be, that's the big change that has to happen. Because for us to teach you our methodology, it's not rocket science. It's really not. Now, right, there's some Elliott that take some practice and some time, and it helps to memorize. And you don't even have to memorize shit. Yesterday on the video, I got stuck on something. I'm like, shit, I can't remember if that X can go. And I had to look. So I'm reaching for my Elliott Wave cheat sheets. And I've been doing this for 30 years. There's things things are going to slip in and out. And you're like, oh shit, can that X go far? And I looked at it and I was like, oh yeah, okay, it can't go more than 2 times the length of the W. And I was like, oh, that's it. Okay, I remember now. Right? Because I just, there's 24 different types of corrections. And every now and then, one of the rules or guidelines is going to slip your mind. It's nothing to be ashamed of, right? I did it out loud on the video, and I've been doing this for 30 years. And I'm still going to check, God damn, can that X go that far in a double zigzag? I'm still checking, right? See, there should be no hesitation to use the resources that are available. Let's double check. Because I also said the same thing in the video last Friday. If you don't apply the discipline of Elliott Wave, you don't get the benefit. If you just kind of half-ass it, well, it's some sort of 5 and a 3. If you just half-ass it and you're not disciplined with it, you don't get the benefit. And that's what happens to most Elliott Wave traders. They come and they go, well, okay, let me try this. And they don't make the commitment to it. So they don't really work. Okay, is that a rule, guideline, break? Where am I there? So they don't get the benefit, and they half-ass it. And then they go, well, shit, this stuff doesn't work. In some ways, this is kind of an odd way to think of it, but in some ways, the fact that they don't do that is to your benefit, right? Because somebody's got to be on the other side of the trade, right? If you've got a winner, somebody's got a loser. So if they want to keep doing that, we're trying to help as many people as we can based on our experience. If they're not going to listen, okay, again, somebody, I promise, I guarantee you, somebody's going to sell it right there. Guarantee it. Because they don't know, right? So they're literally just stepping on a landmine. They don't know it's there. They don't know to look for it. Very, very, very consistent. So now look here. There's absolutely no Elliott Wave on this. Did you need Elliott Wave here to be profitable? That's a challenging count. But, out of every one of these, right? So every single time you hit a golden zone. Now, these are sharp, right? These are kind of sharp. But every time you hit a golden zone, you got a golden corner pocket, right? So right here, you've got your 80%. I could just do this on every one of these. Every single one of them, right? It's going to get that 80%, right? As long as it keeps going up. Now, we got the last ones right here. Right? We got the last one right here. God, I got so much on here. I'm losing it. Okay, so we got this one right here. So we go from a golden zone to a 50. Right now here, that's why when they're super sharply, ideally they go a little wider, right? That's why the preferred is the golden, right? That's like a straight flush. You get that, you want to take that. Here, right? It gets it right away. So did the 80% mathematically hold? Absolutely. On every single one of these. So how can somebody watch one of my this fascinates me. I don't know how someone could watch more than 3 of my videos and me show that over and over again, how consistent that trade is, and then not have it on their chart. It just astonishes me. I mean, I'm just literally putting it in your lap. The methodology. But now, again, when we get here, are you going to be disciplined on the risk? Right? Or are you going to say, well, probably going to the lower one. I'll just move it. I'll just give it a little more room. That's a classic. I'm just going to give it a little more room. Take the small loser, reevaluate. I'd rather take 3 small losers in a row. And if I still like it and it's still golden zone, I still got all of it there, I will take it. I will take that last one until I'm proven wrong. If we break it, well, of course, now, if you break it, so if you bought it at the golden zone, you got stopped out in the 65, right? That's not a knockout blow, right? You can take that, right? You get in the ring, you're going to get hit. So you got to accept the stop. It's just part of trading. It's just the reality of it. Now here, this is just an amazing sequence, and then you've got just the repetition of it over and over and over and over again. All right, so thanks for that, Sensei Tudum. But anybody watching here, I hope that sinks in. That's the point of this. And it's not hard to do, is it? Right? I mean, you can kind of identify, oh, here's a significant pivot. That's a significant pivot. That's a significant pivot. It's not that hard to do. What's hard, right? Pulling the trigger, right? And if you're new to it, right? I'm going to continue to use this example. If you're new to it and you're like, oh, fuck, man, I'm a little nervous about that, right? I've never traded this thing before, right? So you wait for the reaction. Oh, we're coming back. Okay, now my stop is right here. Instead of putting your stop under the 65, right? Because if you're taking it here, where's your stop? Well, so if I'm taking that trade, as soon as I get distance here from it, I'm moving my stop to just under this because I don't want to take that much risk. As soon as I can, if I get that far, well, this is a 4-hour chart. If I get that far ahead, I mean, that's pretty good. That's a almost 40 tick move, right? I mean, that's a good move. I'm moving my stop. Now I get here and it starts to come back. Now, do I, I'd likely have a trailing stop because that's a pretty good number, right? You get a 3 or a 4 or a 5 lot in that, you've got a good trade on your hands. You don't want to give back half of it. But if you're uncomfortable with it right here, well, shit, right? Even on this little one. Right? Do you see? I mean, he didn't even draw this one. Here it is. Again, it's to the, well, let me make sure. It's to the tick. It's to the tick, right? So if you didn't like this one at the 50, well, I'm not sure. Whoa, it drops it right in your lap at the golden zone. And go, right? I laugh, right? But not just because it's actually hard to believe. Right? Over time, you're like, how can that be so consistent? It's software, right? So it's written to do this all the time. So you should be expecting it to be that consistent, right? I mean, it's just both sides, right? Same thing, right? They don't care which one of these hits because they're right. Could very well be the same institution, bank, hedge fund, whomever is behind it. We'll never know who's behind it. But there it is coming down. You got to pivot. Look at this. Swing, we get into the pocket here, goes to second, actually comes just shy of third target, hits a 50. All right, we get the reaction off the 50, drops right into a golden zone, goes to third target. So do you see here, we went third target here, third target here. Now, when I get here, it's not deep enough. Right? It's not deep enough. It's not there. It's not there yet. Even here, I don't have, on a 4-hour, I don't have it. Now, maybe there's a pivot in here that I might have used if I'm down on a 30-minute or something, right? It's likely something there. Again, every time frame, every pivot, every swing, it's always on both sides. I think I hammered that enough. Okay, so let me move on. You guys have got to get that. It's got to be the first thing you do, right? Now, I got a golden zone. What am I going to do next? On comes the median lines, golden corner pocket. All right, let me clear that. Oh, shit, what am I doing here? Let's remove drawings. Okay, so I think I made my point there. Okay, Grant F. Oh, these are always easy. He makes it easy for me. I got to move this up so I can see that. Okay, so where am I going here, Grant F? Here, let's go here. Now, Grant is our resident harmonic trader and always includes, so what he does, which is really, he's adding confluence. So he's got a clean Elliott count here. Oh, it looks like, what's he doing here? 3, looks like he's going A, B into the 4. He'll give you an Elliott count. So where this is on, I got to copy this. Hang on a sec, guys. Usually I don't have to do much on his because they're so good. So here's Autodesk on the daily. Now let me zoom in here a little bit. It's always easier when it's your own chart. I got to pull out and say, okay, where are we here? So it looks like he's going 3, 4, and we're finishing up here on a 5. So we have the confluence of the potential, right? It's always just the potential. We've got a potential for a harmonic in line with a completed 5-wave sequence here. So we have a diagonal. So 1, 2, 3, 4, 5. Looks like it's solid, right? So the extension's in the 1, 2, 3. We overlap, right? I mean, I do this out of force of habit, right? I always wick off the 1, right? Just to keep an eye on it, right? So you might look at that and say, okay, well, I'm a price action guy. All right. So where would you be anticipating the support? Right now, by the way, all right. Now, again, I emphasize this because it's easy to let it happen. Don't go eye blind to the Vegas wave. Vegas wave, right? It splits the lips. Vegas wave, Vegas wave, Vegas wave. We're back there. You see, I mean, that will be great support, right? A lot of my members it's not bright enough. So then I think it's all the easier to not spot it. So careful of that, right? This is good support. Now, sure, we're going to break a little bit underneath it. So do you want to be a buyer down here? Well, maybe not. Okay, well, let's wait until there it is. Now it showed me the support. Again, same thing, right? I'm not to disparage price action, right? We're always looking left, right? Is there potential support there? Prior resistance becomes the support. Like it's like trading 101. That's the first thing you learn. Why? Because it happens all day long. everywhere you look, right? I mean, how many times? I mean, you could just, here it is. Probably do the same thing here a little base here with a little sloppy on it eventually, or it gets tested. It's repeatedly tested, right? That's what they're doing. Is it safe, right? Or is more supply going to come into the market here? Is it safe? Is it safe? Oh, it looks like tested. Let's rip. And what comes out of there? 5, 1, 2, 3. We're going sideways here. Even if you're working backwards, okay, well, that's the 4, clearly. That's the 2. So 1, 2, 3, 4, 5. Skinny little 2, right? Skinny little 2. We're seeing that a lot lately, right? It's an impatient market. But, same idea. And look, lips, right in between them. Pop, like look at the reaction. Is it safe? We okay? Go. Now, up at the top, let's open this up. Grant is always nice to give me what the actual harmonic is because I'll forget them. Same thing. I'll have to look at my harmonic cheat sheet and go, what the? Oh, it's a butterfly. Okay, so A, B, C, right? So all of the swings here are related by a fib relationship, right? So the A to the B to the C to the D, right? There's a fib relationship and all that. That's what a harmonic is. So all you're doing here is just adding additional confluence to the idea that the top may be in. Now, does that mean you sell it here, balls deep? No, it's just you've got a potential reversal zone. That's all it is, just potential. Now, so I'm going to push this off just a little bit. So if you see this kind of reaction, that's unfortunately, right, you're going to run into that. So unless you were sitting there and we're watching it, now here we are on a daily, so you had a little bit of time there. And you see that start to come, well, that's right. I mean, there's a harmonic that's just absolutely dead perfect. Because your first target usually in harmonic will be right here, right? So there's your first target. Second might be something, typically the 50 and the 618. You'll have multiple targets, and then maybe you let a runner go unless you're going to come all the way down here. So he's identified a high probability top here. Now, we don't know for sure, right? There is no certainty in trading, right? Stop looking for it. No certainty. Only probabilities. Okay, I got a pretty good reaction. So once again, right, coming back to, looks like there might be some support here. So now I'm okay. Pivots, right? So if it's completed here, if it's going to hold here and kick into the 2? Is the algorithm there, right? So it looks to me like that's too deep. So it looks like you'd have to go back 1. So I go here, right? So it's broken. Remember what the software is going to do? It's just going to go back a pivot, right? So to look here, is it here? Could be here, right? This is the dominant, right? This is secondary. This is the dominant pivot. Where are we? So now start stacking. Okay, I'm a little past the 233, but I'm in the range for the golden zone. I'm at structure. I can go from a dominant to a dominant. I'm at a 50. Now, nothing says it couldn't go golden zone, right? It could just keep falling. But what is Grant waiting for? What's the setup here? It's not to nail the turn. You don't need to nail the turn. It's higher risk to do that. What's the play? He's just going to wait patiently, right? Just as I would, right? He's going to wait for this to come in a 3. And if I get that in a 3, now I have a high degree of confidence here. Because I'm really, what you're doing here is just saying this pattern has repeated 500 million times before. So I'm willing to risk some capital here. Of course, that's not an actual number. I don't know the number, but I would tell you it would be that or more, right? So, all right, so what are you going to do? What would you have there? If, right? Now, this is a big if, right? If it comes here and we get that, what do you got? Golden corner pocket, meaning I've got 80% probability. Now, look, I waited for the technical pivot here. I got the reaction. Here's the retrace because somebody caught this short. Right now, it starts to climb back up. We start to go into whatever this is, 1, 2, A, B. We don't know, but it starts to climb back. Okay, well, the people who caught this are going to start to cover because they don't want to give back 2/3 of their profit. So they start to cover. That drives it up. Now, the other thing that will happen here is that as it's going up, bulls will have that as a bullseye because they know they're going to be a shitload of stops sitting up there. So if they can't get it there, that's the big tell here that you gotta understand. Bulls are going to try and get the fuel that's there because there will be stops there. So they're going to try and get it. Well, look, here's the 50. There's the target right there. They're going to go for that, and there's software behind them, right? They're going to go for that. But if we get right here, Now I've got some probabilities working for me. Now you can make the same case, right? I mean, you really have it going both sides. You've got it going both ways. But look here, this is so narrow. Really combining it this way, you'd have the additional benefit here of if, right? It's always a probability, not a certainty. If we pivot here, well, I've got my 80% working for me here, right? So I've got 80%, I get to the median line. I know I've got an algorithm working with me, right? I'm trying to work with them. I'm trying to just tuck in behind them. Oh, cancel. All right. So I know I've got that probability. Where's the prior structure? So you see what could happen here? This is the challenge of it. I could go here, go here, hit the target here, hit the median line, hit the structure here, and still be at a golden zone where I would have on the other side of that. Right? So this gets realized, hits the median line. Now I've got another exact same thing happening on this side. Do you see that? Now, less of a threat here, right? So this is an important point. So now as it starts to come up, am I still worried about this? Well, less so, because one, the pivot has changed, right? So, oh shit, how can I get that off of there? Right, since it's already realized, it's going to be a different pivot. So there will still be defense there, but it's going to come from here. Right now it's going to be right there. So as it starts to come up, if it's denied, well, we know what happened, right? So I've got 80% odds of getting there. This one has already been burned, right? That 80% is burned. It got realized, right? So that 80% doesn't apply anymore. This one has 80%. It's got 80% of getting there. You see, it's just a constant back and forth, and you're going to get it. Because very often that will happen. It'll get there, and this guy will kick in and take it down here. Welcome to trading. Right? You don't know. But see, after all of that, what you want to understand is that if you're putting it right here with a tight stop, even if that happens, this is just a jab, right? You're not going to get an uppercut to the jaw there because you didn't do this. I'm going to give that lots of room. That's just putting your jaw right in front of your opponent and saying, please knock me out of the ring. It's just back and forth, right? And we don't know. So how can we get even more of an advantage as to which way that's likely to go? Now we put it in context, and that's where the Elliott Wave comes in. Hey, I just completed 5. I'm looking for 3 down. What did I complete here? All right, if I completed something at a larger degree, which looks like this would, we're on a daily. If I've completed something significant here, well, I can kind of look back at this and say, well, either the 5 is in or there's another leg here. And this is getting mighty crowded up here, but let's get rid of all this. I think I made the point there, but let's get all this. Okay. If we start to come down, so it's a function of context. Okay, so what did I complete here? Again, assuming, because we've got a lot of history here, coming off of some sort of a significant low here, this is at a larger degree, a significant top. So you're not just expecting a little retrace to the 50. You're looking for something. Your expectation here is that you're going to get something much bigger. So that 5 completes. You're anticipating 5 down. Right? There's lots of corrections here. You could get a 3 down. You could get a 3 up, right? You all sorts of scenarios here. But your first thought is, what's the most common retracement, right? A zigzag. So if that's the most common, why would you be forecasting something other than the most common? You react in context. If I get this, and then I start doing this. Oh, well, something else is going on. Oh, maybe it's a flat. Okay, well, now I can qualify that and say, well, if it's going to be a flat, it's got to go 90%. Right, or at least pretty damn close, right? If I get this, here, let me put my platinum, right? So there's the 887. So it's got to get up into this range. Now, if it gets up in this range, it starts to turn down. Well, hey, I just got a 3 followed by a 3. Right? And once again, you can be guaranteed there's a push to try and get those stops. If they can't get it, the market is talking to you. So what now you're looking, now it's all the more. It can't get that. Oh, that's a big failure. Right. So now what you're expecting, if that flat is going to complete, just as he's got a zigzag drawn here, you're looking for the big 5 down based on what came, right? It's the context. Oh, big 5 down. What did I do? Yeah. Right back to the support. You see, right? So it starts with, as he's teed it up here, right? So we've got an Elliott count. Now, we factor on the harmonic. Now, what are we anticipating out of this? Well, we already got the reaction. So the harmonic was spot on. Now I get the reaction. Now the anticipation is the retrace. And if they can't get to that pivot to get those stops, expect the reaction to be more severe. Oh, so look here, you'd be here thinking, oh, that's going to go into a 5. If they can't get the stops here and it kicks up, right? The market is telling you a story all day long. You just look, right? So if you're short, don't you want to go get those stops, right? On the anticipation, it'll kick it down further. If they can't get it and it starts to go back and we take out this pivot, something else is happening. It's not a 5, it's a 3. Does that mean we're going to go 1, 2, 3, 4, and this is going to, oh shit, this would turn into a 5? Well, you can't eliminate that possibility. Maybe there's another kick here, and this is just a 3, and we're hey, 5. That you're wrong here. You're wrong here. Get used to it. It happens all the time. Oh, looks like that. Maybe that's a 1, 2, and or 3, 4. We're going up for a 5. Maybe the overall count's wrong. Right? That's just the reality of trading, right? Your analysis needs to adapt with the waves as they break. To hammer the wave analogy. No two waves are the same in the ocean or in Elliott. They're never exactly the same. They resemble, shit, look at Bitcoin. Bitcoin is putting in a remarkably similar low basing pattern than it did on the larger degree. Oh, boy, I went a long way here on 1. What have we done? 2? Okay, right. God, I got to speed it up here. We'll be here all day. Well, you know, the point here is not just to look at the setup here in Autodesk. It gives me an opportunity to kind of try and drive these points home. Not for my sake, for your sake. You know, I've got the 30 years of history here, right? So this comes a little more easily for me because not because I'm smarter, just because I've been doing it for so long. Just like anything, the more you do it, the better you get at it. What am I trying to do here? Just shorten your learning curve. And have you? So I was lucky. I had some good teachers, very good teachers. They taught me. And still, right, just my personality, I was just stubborn. I was like, God damn it. I don't believe, I'm going to test it. I'm going to try those breakouts. All right. So there'll be somebody who will buy that. I'm going to buy the breakout. You do it enough times, you get smoked enough times, and eventually you say, you know what, I'm not buying breakouts anymore. What I'm going to buy is the retrace. I'm going to wait, and I know I'm going to miss some. The Apple course, right? And particularly in traditionals, it's much more common with equities. I can never get this fucker hot, right? What I want is this. I want to retest that in the same way that this gets retested, this gets retested, this gets retested, this gets retested. Almost everything, right? Because you think about the size that's being traded in there. They don't fuck around. They're going to test before they put millions of dollars at risk. They're going to wait and say, is it safe? Or is a bunch of supply going to dump into the market here? Well, I got on a tear there. All right. Well, let me keep going. Okay. So this, if you're looking for setups, right, have this in your watch list, right? It's perfect, right? It's just waiting for the next trade, right? There is no trade here right now, in my opinion. There's no trade there. But as he drew it here, got a nice one in the oven. All right, let me keep moving. I got 2 from Grant, and you'll find what you'll notice immediately. I should wait and bring it up before I put my foot in my mouth. But I'm going to guess that this will be the exact same thing. There'll be a harmonic on top of an Elliott count. And lo and behold, right? Because Grant now has developed his own style. He's taken our methodology and all he's done is add in the harmonics, right? Which is just one more confluence point. So we're looking for geometry, fib relationships, the Elliott pattern, the time relationships. We're looking for all of that. He's going, that's good. I think I can make that better. And he's adding the harmonics, right? So that works for him. So our entire methodology and then putting a layer of frosting on top of it, right? And he's very consistent. He doesn't post in here without it, right? Because he's waiting for all of those ingredients to be there. Now, let's see. Why am I not getting anything here? Let's see. If I go auto, what did I do wrong here? It is Myrna, and you gave me a 30-minute. Why do I not have anything? Let's try that again. Let's reload. See if it comes up. All right, bear with me. Okay, there we are. Okay, there it is. Now, this has become sort of a trademark of Grant F's work. So look what he's doing, right? So it's almost, I wish I could hide the harmonic here, but I guess you can see it. All right. So from the proposed top here. So in context, right? We're looking at Moderna candidate, right? We never know for sure, right? We've got a candidate for a top here. Right now, you'd have to get all the way. Now I'm on a 30-minute, right? So we'd go all the way out to higher time frames to say the top of what? Well, he's got it as the top of a 1. So we can just anticipate that there's a completed impulse. Oh, this is ballsy. Okay. I like this, Grant. Okay. So Grant's saying we completed the wave 1 here. Remember, we're on a 30-minute. So out to a larger degree to get full context. Oh, shit. Let me just see if here I go to a 2-hour. Let's see what you're up to. Okay. So he's working off of, COVID low. Okay. 1, 2, 1, 2, 3, 4, 5 gives me the 3, the 4. So big extension in, well, let's see if we go to log scale, I'll be curious. Yeah, it's not about the same. Okay. So big extension in the 5th, right? Well, that works. Right? I can work through all the subdivision. And even if it goes higher and this trade ends up being wrong, probably relabel here. You'd probably put this into it. You'd complete the 1. So you might do it here. Complete the 1 here, right? Then you say, it's a 5, right? Because it keeps going. We don't know. We make, it's always a snapshot in time. Here's a moment in time. This is a candidate to have completed. Nothing more. Nothing more. Okay. If it's a candidate to complete and we've got a good top in here. Now note we're on, he was on the 30-minute. He's on a smaller time frame. Right. Remember, the lower the time frame, you see, most people are drawn to the lower time frame thinking it's lower risk. Well, number one, you're going to have way more trades, right? More trading cost. And you're going to get stopped at way more often, right? Because you got so many more trades. Just the numbers of it will work against you, right? So if you're trading on these smaller time frames, be mindful of the fact it's going to be more trades, more cost, and likely more stops, right? So your trading percentage, your winning percentage has to be higher. Also, your wins will be smaller because of the range that you're trading. You trade on the 4-hour and above, your wins are going to be significantly higher, right? Your losers can be as well. They go hand in hand. But what you'll make when you're right, it's always a function of your time. Right? I when I'm not doing this, I'm day trading in the futures market because that's what I know. That's where I cut my teeth. Right? That's where I'm most comfortable. So pick it, and if that's what you do, understand the nature of the game you're playing. Okay, so we got 5 down. So not only do I have harmonic, because if you're not using Elliott Wave, you just go swing. So you're losing a little bit, right? So if you're just a straight harmonic player, you're losing a bit, right? So Grant's getting the whole ball of wax in here. So I got a 5 down. Good. Okay, so there's a candidate for both a 1 as well as the A leg of a harmonic. Now I got 3. 5 followed by 3. Heads up, because what did I get here? I didn't get a new low here, but now I can squeeze a 5 in there. It's not gorgeous, but it'll get done. Here I'm on a 30-minute. You probably have to go down to a 5-minute. You can kind of see it in there. I know it's probably harder for you guys here, but there's a little baby 3. Oh shit. Looks like 4, 5, right? It's tiny, but it's in there. And they're certainly, right? There are going to be times where you got to kind of squish it in. It's just, Elliott's not perfect, right? So don't expect it to be. But you're making do with what you got here. All right, looks like I can kind of squeeze that. That looks very 4-ish because it's just sideways. One more pump down, and we base. And again, I promise you, right? It's just logically, right? If you're short here, do you want to get those stops? Yeah, you do, right? Because you're looking for the fuel. Doesn't do it, can't do it, right? So that's why this leg here is bigger than this leg, right? So all those shorts have to cover. Up we go, right? So now I've got a candidate here for 5 down, followed by 3, followed by 5. So within this, I've got an A, B, C. But you see here, it's happening at a higher degree. So the way he's counting this is A, B, C into the B. Here's his blue B going up for the C, right? So it's got some complexity to it, and this takes a little practice, right? There's a little 5 in there, sideways for the 3. So we A, 3 down, we can't get the pivot. Now here's the big leg. That's why in your purple belt, when we're testing you, we want only C's and 3s. Because if you can't do it with C's and 3s, you can't do it with anything, because those are your money legs. That's why we test you that way. Not because we want to be assholes about it and not give you your purple belt. It's because we want to make sure you can do it successfully with 3s and Cs. You're off to a great start. You'll have a massive advantage over 95% of the people trading in the market if you can just do the Cs and the 3s. That's why we do it that way. Nobody else does that, right? That's a TradeDevils original. Okay, so I got 3 down and I got 5 up. Okay, right. So now look at the reaction. First thing I get is 5 down. Where am I getting that 5? Right in the, it's the potential, right? The emphasis P, potential reversal zone. Right? Not an absolute guaranteed to reverse their zone. It's a potential reversal zone. What do we get? Right. So if we're thinking that this is A, B, C off of the completion here, we're anticipating that correction is not over. Right? I mean, here's you can just keep it simple, right? So now, look at the confluence that he's adding here. In addition to the harmonic, in addition to the Elliott count, he's got a set of median lines here, and we're coming up right to the edge of it. Right now, these guys use different colors than me. So he's got his 786, his 886, and his 100%. We come right up here. So that's why this little green zone is highlighted here, because the PRZ, it can pivot at the 786. It can pivot at the 886 or the 887 as well. So you just have you see, potential reversal zone. Now, the outer edge of the median line is just another confluence point. So look at the amount of confluence he's got in here. This is a great setup. So I don't know if he caught no, he didn't. All right. So this is the confirm. Right. Oh, let me zoom in there a little bit. Okay. So we get 5 down. Again, not because we know with absolute certainty we're going to get 3. It's because 500 million times before, when we got 5 down, it's followed with a 3. I mean, we're going back to Elliott discovering this in the 1930s. This is a pattern that we know repeats. It's not like, oh, well, hey, man, it's 2021. That shit doesn't happen anymore. I mean, every single day, all I do is show you it happening over and over and over again, right? Nothing changes. And it doesn't matter if it's crypto or Moderna or the pound yen. It's the same shit over and over and over again. That, my wife, when we were walking our dog this morning, my wife saying, don't you get tired of doing the same thing over and over again? I said, baby, that's the superpower. That's the whole point of it. Is the repetition, right? So as a teacher, the repetition is to get it into your skull, right? So I just show you over and over and over again until finally you're like, that guy has shown me that so many times. I'm gonna try it this time. Now, one time is not enough, right? Because odds are you try it one time, you get stopped out. You got to try it 500 times. How many? And so as long as you're not doing stupid things like putting your stop way up here, I give it room to breathe, and you're just taking small losers, I can absolutely guarantee you, if you just follow this, you're going to hit one of these. And as long as you didn't take stupid risk when you were wrong, because you're going to be wrong when you're right, absolutely be at peace with that. That's the reality of trading. You're going to get one of those. And then you're going to go, hey, maybe I'm going to start paying attention to that confluence idea. Because that's really all we get, right? Otherwise, it's just chaos. It's just random shit on a chart. It's just chaos. There's no rhyme or reason. How would you apply any intelligence to it? No shit, right? It goes up or it goes down, right? So that's the illusion of trading. Well, how fucking hard can it be? It's going to go up or it's going to go down. Right? Wish that it were that easy. This is great work from Grant, right? So here's the 5 down. So the anticipation is, does that look like a 3? Not really. Looks to me like this is, again, it's par baked, right? We wanted something a little more complete here to give me the 3. Now, if I get the 3, this should be an easy trade to take. You see, most trades, there's a little bit of counterintuitive thinking that happens here. So the average person is going to look at that and go, hey, whoa, why are you selling that? It's going up. Why are you buying that? It's going down. That's the reality of being a trader. Well, I suppose, right? They're the breakout trader. There's other methodology, right? So let me reel that back a little bit. If you want to apply our methodology, we're retracement traders. Essentially, if you want to simplify it, right? We're retracement traders, right? So I'm looking for it to go down so I can buy it. I'm waiting for it to go up so I can sell it. Right? That's the foundation of being a retracement trader. Because, as you've heard me say 10,000 times, this is all the market ever does. It's all it ever does. That's it. Look at all the complexity in here. But all it is a series of swings that either break this low or that low. It's one or the other. That's all the market ever does. right? So here, this is, you can see it right here, right? It's doing this. Now we're retracing. Now, are we going to go up this way or are we going to do this, right? Here's what he's anticipating, that we're going to do this. That's the 3, right? 5 down, 3 up. What's he looking for? 5 down. Now, so you go, well, where do I take profit? How do I know? I mean, I don't know. Shit, man. Where do I know? That's why you have targets. That's the point of look what he's got here. Do you see the median lines here? So he's looking for a target all the way down here. What's the most common location? If he's anticipating this is 1 and he's working on the 2, where's the most common location for a wave 3? 1618, the length of the 1, right? So he's got a big fat target down here, right? Do you see? That's his home run ball. Now, do we know for sure we're going to get there? Of course not, right? So he's the first one, he's taking it to 618, right? Logical spot, right? Bank some profit if you can get it. Look at the risk reward on each of these. 3.5 to 1, 9.29, 14.4. You don't need a lot of those to offset all of these, the little loser, little loser, little loser, little loser. There's going to be lots of small winners. They're going to be big winners, right? If you allow a big loser, right? Self-inflicted. Retrace, right? So we got 5 down. We get this nice, now this, right? You'd like to see this come in a better 3, right? We're on a 30 minutes. So let's go to a 15. It looks like that's just the A way, right? If at first glance here, let me get out of there. Looks like we double bottomed here. Not ideal, right? But double bottoms are just part of trading, right? You see it all the time. That's a little bit of a truncation. So you might be thinking 1, 2, 3, 4. You hate to truncate, right? You do it only as a last resort, but there you got it. You're kind of stuck with it. Right. So now here's if you don't love it, don't feel like, oh, I need to trade that. There's so much to trade. If this doesn't give, now you can make a case here that this is this is actually a good example. So what do you do here? It doesn't look like we finished it quite. Right? It looks like you were on your way to finishing it and you needed 1 more down, right? So then you'd have much more confidence in the 5. Don't feel like you need to trade. That's what gets a lot of people into trouble, right? I have to catch myself doing this as well, so especially when day trading, right? You want to be picky about it because there's absolutely no shortage of opportunity, no shortage of assets to trade. So before I pull the trigger, I want it to be just as perfect as it can be. Because and again, I've been doing this for a long time. I don't need the thrill. I don't need the action. I hardly have time for it. Right? So if you're down here and you're going, whoa, do I want to truncate that? Doesn't look like it finished. So then your next thought might be, well, maybe this correction is still underway here. Maybe I've got a 3 followed by a 3. So if you're a little unsure, just because all of this shit is here, right? I got resistance level. I got the harmonics. I've got all of this in place. If you don't get the setup the way that you want it, don't take the trade. You don't need to wait. Right, let it reveal itself. It will reveal itself. Now, if it does that, you're like, well, shit, man, I'm glad I didn't take that trade. Now, if it starts to roll over, maybe we've got a bigger. Now you got to wrestle with this, going, 2 to 4. Doesn't look great. Maybe that's a 3 followed by a 3. You've got to, right? It's just the reality of analyzing in real time. At some point, you have to make an educated guess, because that's, for lack of a better term, that there's no certainty as to where that's going next. Now you start to dial in a few things. Okay, looks like I got a little resistance there. Now, first, right, after we hammered on this all morning, what's the next thing we're going to look for? Let me get the measured move back on. All right, 50 to the tick. So you're looking at that going, wonder why it stopped there. Do we have to wonder? That's 50 to the tick. Okay, I can understand, right? So there's an algorithm that's in there, right? Because there's always an algorithm in there. With that, it's target. Well, if it did that, that actually might complete my 5 a little better, even though I don't love this beginning. And that's a pretty big 4 relative to the 2. That might be enough. That might be enough to say, okay, well, now I got my 5 in. And I can see what did the algorithm do last? right? What did it do? Did it complete here? Well, if we complete here, again, now you would just do the same thing, right? So hang on. You'd pull it down to this. Say, now you're looking for your 3. Okay, I got my 5. Okay, now can I get my 3? Right, so he might have to just move this down a little bit. Just what he's posting is how it looks right now. He's not at the market, sell it right now, let's go. This is well thought out. See what he's doing here, right? And you got all the upside. He's got his risk defined, so he can do the math and say, okay, that's X percentage of my account, right? How much am I willing to risk? Do I want to enter all of it here? I mean, that's the distinction that I'm trying to draw your attention to between, oh, hey, look at this. I got a harmonic, and oh, it looks like it's a 5 and a 3. That's the easy, well, maybe not the easy part, but this is the more intellectually stimulating part. Oh, look at it, man. I nailed that. I solved the puzzle. This is what makes or breaks you. How much risk? Where are your targets? How much? Again, it's one of the hardest things to do in trading is let your winners run, particularly after a loser, because your instinct is to say, oh, fuck, I got to grab that profit, right, to offset that loser. So you grab it here, you take the whole wad out here, and then it goes down here, and you're like, God damn, man, if I just stayed with that thing, I would have made back all those losses plus 50%. But I was so desperate to take the profit here because I had a loser before it. It's just human nature, right? You have to fight that, right? That's all the more why there has to be a plan and not just reacting to, oh shit, there's a 50, I'm gonna sell it. Do you see how well thought out this whole approach? This is a campaign. That's a better way to look at it. He's put together a trading campaign here. Okay, I got targets. I got 3 targets. I've defined my risk. I know why I'm taking this trade. Now I'm just waiting for the right setup, and it may not come. After all that work, it may not come. Next trade. Nice work, Grant. Just the consistency. Most days, I don't even have to copy it, right? Because it's so good what he posts, right? Just very professional approach to trading. Oh, here we go. I got a Rixus. Here's a longtime member who loves to make it a little tricky for me because he challenges me. All right, so let's see what Rixus is thinking. We're looking at Apple here. All right. Well, get this stuff up here, and let me copy that over because I'm going to guess I'm going to have to do a little work here. 1 hour on Apple. Well, today is an interesting day to be trading Apple. Right, we got their big event, and honestly, I've been waiting for the 13. I'm still rocking the 8, but I'm going to upgrade to the 13 once it's been out for a little while. All right, come on, Apple. All right, what are you giving me? I got notes here. Good looking opportunity. Best way to look at it would be to open the object tree to hide everything and start at the bottom, unhiding and work your way up. Oh man, you're going to make me work here. Okay. So you gave it to me on a 1 hour. Let me see if I can let me get some deciphering going here. Okay. So it looks like, oh shit, man. I don't know if I can do this on the fly the way you're suggesting. Let's see here. If we're going to hide everything, oh, fuck, how am I going to do this? Hide everything. Can I hide? Is there a hide all? Well, here, let me take that one. Let me hide what he's doing there. Hide what he's doing there. Okay, so just thematically, I can look at this and say, okay, right. So this is a classic, buy the rumor, sell the fact, right? So we've got this big event. Apple rocked hard yesterday going into this event today. Oh, from what I've read, they're not expecting to be, this is not going to be a revolutionary upgrade cycle. I mean, sure, the phone will be better and cooler than the 12 and the 11 and all of that's going to be cooler, right? But do we get a big super cycle reaction out of this, as in, up we go. So he's suggesting here that this is kind of a sell the rumor or the event kind of an issue here. So let me see if I can decipher this. Okay. So first off, we've got this set of median lines here. So let me, this is, What do I want to do with that? This is defining, this is not really an Elliott count.
So if you go to object tree, you can
help me with this.
Click the very bottom. No, where it says trend line.
That one?
Yeah. So just touch it. Now go to the very top one and press shift and it'll highlight everything.
This one? Shift, hold it down?
Mm-hmm. No, that's volume. So go to pitchfork. The top right there. There you go. And then you can hide one, like hide just any of them, and it'll do all of them. There you go.
Oh, there we go. Okay, so those are all hidden. Yeah. All right.
So now you can click one at a time if you want to turn it on. Mm-hmm.
Okay, so let me start there. Okay, I got this. Told you, he makes it tricky on me. All right, so I got nice. I might tighten that up a little bit. Sometimes they move when you change. Okay, so now you guys understand that a trend line is just it's the exact same thing as support and resistance. You're just getting it at an angle, right? That's all it is, right? So this is, and of course the market does it for you, right? We draw the line, but the market is actually telling you where the support is, right? It's just doing it as it's rallying. So if we think of everything as support and resistance as being horizontal. I'm assuming, right? I don't need to say that, but just in case there's anyone who's brand new to trading, right? That's why people use trend lines. It's just support and resistance. It's just using it as it's climbing. So to break this, if you were to extend that, right, was the market's talking to you. The same thing here. You would do the same thing here. All right, so you might draw that this way, think, oh, is that going to be the support? Well, first it was here, right? You had to break that. So, and the great example here, you break it, little retest, right? Test from below, up it goes. All right, so let me keep going. So I want to unhide that. Oh, well, he did it. All right, see, there we go. All right, so my guess is that I moved it a little bit. So put it right about here. Oh, generally on these, you don't want to cut into body if you can avoid it. So going here where I've just got wick, that looks like that's all wick. So that's pretty solid right there. It might come up a little bit here based on that. It doesn't matter. Right? Let's just keep going. So, oh shit, here, put the whole thing together. Okay, now I got text. Two possible triangles here, but either way, good anchor for a 4 represented in red and orange. Okay, so that's going to be up above. So now I'm going to go, okay, so here's his, okay, now I'm with you. Okay, so here's his triangle, unlabeled, but he's got it. All right, so I got that. Then I got the pitchfork that's in the middle of that. So now that I've got this, I'm going to put it right here so I can see it. So the point he's making here is how we create the ascending triangle. Now I got a set of median lines. Okay. If you're worried here, right? Now I'm going to hide this one. Just so now we've got that in context. Right. Oh, where are you here? Now there's complexity here, but really, what is the market doing here? That's all it ever does. A lot of complexity in there, but at its base, that's all it ever does. We swing. Now, we come right here, and you kind of look there, and you would definitely be looking left, saying, right, does that seem reasonable? All right, I'm going to just kind of pull this over here. Does that make sense as possible support? Well, I'd probably put some volume profile on that as well to say, okay, well, it looks like the market spent some time here. So this potentially, right, you wouldn't necessarily know, but if you got this kind of a reaction here, I got up here and I come down and retest, right? Now, the fact that they can't get those, right, again, market is talking to you because they want to get them. If they can't, look what comes off of it. So once again, I don't know how, thousands, right? So there's your 80%. It's not a golden, right? It's deep, but still pops the 80%. It's once you get the pivot. Now, let's be clear, right? Here, right, you don't have enough time. Right? It's not there yet. That's why the fact that it takes a little more time, almost better if they go further, right? But this one, here's what you get. Now, when you enter the trade, so you can enter it here with a stop right under it, right? So this, you might be clenched a little bit there, but you didn't get taken out right now. So you got a little nervous. So here's a little pullback here. That would have been a great spot to add. Now, of course, right, that's hindsight trading. But, if you're looking for that, if you're looking for, I'm not sure a little bit. Oh, come on. God, I never get that. Something like that. Ooh, we're going to struggle right there. Struggle, prior resistance. Resistance can't, somebody's fighting that. Let me tell you who's fighting that. Oh shit, I got his colors on here. I got to put mine on or I can't follow. You see that? Why? Why can't it get traction there? Trying. Right. Eventually they break it. Now, then what's the next thing they have to break? Right. So they break this one, right? One side has to break or we go sideways forever. So they break this one. Right. So now you're feeling very good about this pivot and you know where it's likely to go. Right. Again, it's 80%, right? Where else do you get it? You don't get 80% anywhere else. So what's the next thing they're going to do, right? That there's going to be this one. Do you see what happens here? We come up to it, right? Likely a little front run, assuming I'm right on those pivots, but likely a little front run here. Oh, right. Because they will front run it. So somebody was, stepped in there for a little size. Now if they can't get this to go down, there's the target. Can't get it. Breaks it. Now you're clear. Right, because this one already broke, right? So you don't have to worry about this one because I can just show you here. You can look at it and say, oh, well, they broke it there, right? So this one's not in play anymore, already broken. It's this one you had to worry about. Break it. Where is it likely to go? Ping. Now, right, trading principle number 3, if it's not going to pivot right at the median line, it's likely to hover around it until it decides which direction it's going to go. Well, in this case, we just go sideways. So we pinged. So the 80% is burned here. Where it's already eaten. All right, let me keep going here. Now he's going to put. All right. So now can we put it in Elliott context? Oh, probably good at that. Looks like you'd have to do it that way, right? So you have to go A, B, C into the 2, right? So I'm with you. Big 3, nice big fat 3. So if you get this coming off of it, right? So right, do you see the confluence here? So first we started with the triangle, right? So first it has to break the triangle. Then now we've got the median lines, we got a target. Now, hey, does the Elliott count add value here? Oh, sure looks like it does. So what do? We completed something here. We completed a 5. Now there's absolutely nothing that says that couldn't keep going. Right. But again, it's just odds, right? So in part, a little bit of the story here is that it can't get back to the median line. Now, it could, right? Again, I got to be careful the way I say this, right? It could easily do that. There's nothing that says it couldn't do that. But you don't get certainty, right? All you get is probability, right? So that looks like, oh, shit, that looks like that might be a triangle too, right? So some sort of a 4 over here. Because why? What's the tell of the 4, right? We just go sideways. We don't progress the trend. We just stall. Oh, there's one last little kick, but it can't get to the median line. Median line is always a magnet to the market. Algorithms use it, right? So if they can't get it there, potentially a rollover. So there's a nice low risk trade here. Okay, so let's put the next one on. Oh, now I see what he was thinking. Okay, so this one is already burned. So I'm gonna hide that one. Okay, so now we got the bigger one. Now from here, remember trading principle number 4, failure to make the median line sets up a move equal to or greater than the swing that failed to get there. Right. So already now this could, that's not what I'm saying, right? It could keep going. But right now you've got a good candidate here because it failed to make the median line. Failure to make it, right? So where's the target? That's the minimum target, right? Equal to that pivot. Got a 5. But you need to put this in context. So if this is, so for the triangle, this has to be the low. So this would be, well, shit, whatever the next degree is. So I'm assuming he's got it in here. This would have to be the triangle 4 because now we start up into the 5. So let me keep going here. He's probably got it. Okay, low of 2 daily. Pitchfork seems rather bearish. So I'm assuming what he's referring to is the fact that we don't make the median line.
He messaged me to tell you to put it in log.
Oh, shit. Okay. Well, that would have been good to know. Okay, there we go. All right. Okay. Well, nice to get on the fly counsel. Okay, so we got, looks like, oh, what are you thinking here? Okay, so he's thinking A, B, C into the B, down for the C. So we get a kind of a unusual, but it's not really, right? So it's running flat. 1, 2, 3, 4, 5 puts us in the top. Okay, so now we got fibs. Okay, so that, oh shit, he uses different colors. Right? Always hard for me when they use different colors. So that is his, that's his 50 is golden. So this must be his negative 23.6. So it is. So this is a little sloppy here in terms of the break. Now, let me just switch it to mine so I can be sure what he's doing. Let's do this one. Oh, okay, so there's the golden zone. Okay, so, oh, Jesus. Okay, guys. Thanks for that, Erixus. Do you see this, guys? That's to the tick. All right, now, did this algorithm have a decent trade? How do we know it's an algorithm? Right, look at the reaction. All right, so he was right. That was a good, nice setup, Erixus, to let me reveal it one at a time. So, I don't know what else I can. There's almost nothing left to say there. I mean, I've shown it so many times. So you just algo target hit, right? In Apple of all markets, right? Probably the most traded asset of any. Look how perfect that is. And not to mention, it's a golden corner. Well, pardon me. We get the golden zone here, but this is interesting, right? That's the tell I was just alluding to. Hey, we're not making the median line, and this just retraces and has another leg, right? Then we go second target. So again, this could go up and get that. Odds are that it will, but if it starts to roll over here and we start breaking some of the support, so what would you be looking for? Well, clearly that's going to be part of it, right? Can we break that? And what do you want to see here? You want to see this. Is it safe? Or is a bunch of buying going to come in here? Oh, all right. Right. We tested. It's almost like they're baiting buyers here, right? Oh, you want a piece of this? No. Whew. So you certainly put it there. Any pivot of significance, right? You got to pay attention to, because there'll be reaction there, because there'll be algorithms that will use those, right? So I got a nice little spot here. Kind of looks like that might be a 50. So if I'm going to use a secondary pivot and I'm coming down here, oh, lo and behold, right at the 50. Shit, you could pull this further and say, well, I got a pretty significant area of resistance potentially flipping to support. So again, there's no way for us to determine other than the tools that we're using here, because that's certainly, it could do that. It could, but there's going to be an algorithm there. We don't, right? We know that, right? We could do that, but let's say it did that. Right? If it did that, well, you relabel it. We'd have a little more, another kick here into the fifth. You still would have a failure to make the median line if it starts to roll over. But right now, you got a lot of solid ingredients to suggest here with this, right? These are the ingredients of a trade. All right, so there's hitting the target as he noted. What has he got for me? Oh, that's his where he's looking. Okay, super conservative first target would be a 50% retracement of this fifth wave move, which is right here, which is in line with that support and resistance we just drew. Here, if I come down to the, essentially using this. Right, using that little shelf, right? So here's wick, shelf, right? So that's a great first target, right? So bank a little, always, right? If you get a winner, bank a little bit about, right? It's because if you get stopped out, right, that eases the impact to your count, as well as psychologically. Well, I got a piece of it, right? Something else happened, but I got a piece of it. Oh man, you gave me a tighty there. Okay, so let's go. Oh. Maybe I can get it on a 30. Oh, that's tight. What are you down to there, Rick? That's a 5? Okay, so, all right, so I'm going to take this piece and move that off. All right, so you made your point there. All right, so this is really tight. So he's probably down on a 5-minute here. No, pay attention. All right, I got to do mine. You see it? Again, right? I mean, it just, at some point, this has to start to sink in. What do I get here? Golden corner pocket. Right? Because that's what you had to worry about from the pivot high. What happens at the golden zone? So it blows right through, right? It's so sharp. We go all the way through the outer median lines here. But do we get our 80%? You know, I mean, all I'm doing is just putting it right in your face. Sooner or later, you guys are going to start to do this, right? I mean, eventually, right? If you see it this many times, you go, oh, geez, I got to at least try it, work with it, right? See, don't just do it blindly. Essentially do what I'm doing here, which is go back and test it over and over and over again. See, God damn, man, that's about 75 out of 100 times that makes the median line coming out of a golden zone. After a while, it's so over, the evidence is so overwhelming, you got to pay attention. Oh, we got an inside I'm going to hide this one just so I can see that one. Well, he's really getting down to it. Okay, so why would he do that? Why would he do that? Let's get it tight. Right on there. Like when you move things around or change the time frames, I'm sure you guys have recognized that TradingView, pretty much all platforms, it'll shift just a hair, and you have to reset it. Now here, we go beyond the golden zone here, but we get the 707 to the tick. So it's still very tradable. That this is the kind of the reality of the fact that this, as I will often tell you, this used to be the best kept secret in trading, right? That golden zone was where the algos kicked in. Myself, as well as other educators, have been identifying that for the public here. So it's not quite the secret that it once was. So now it's very, very possible that they've recalibrated some of these. Some of them might be, I've seen 66, 68. There are people trying to reinvent this here. There's the 707. So, which is why I have it on there, right? So on this one, whenever I'm looking for the 50 to the golden zone here, I keep the 707 for a couple of reasons. One, ideally, if you have the account size for it, if you can give it to the other side of the 707, you're giving it that little extra cushion there in case you've got, some algorithm that's been rewritten, or you've got just a little stop run that happens there. That's the ideal placement. If you're trading the golden zone, I would tell you put it on the other side of the 707 because you will see this. Right, regardless of the fact that we don't get a golden corner, a corner nonetheless. If it's not in the golden zone, you can't call it a golden, right? So you got your 50%, or pardon me, you got your 80% there within, didn't take long. Okay, let me keep going. I got another pitch for it. That's the one we just looked at. This is the one, I'm gonna hide that one. Now with that one done, I'm gonna hide this one. Now I got a rectangle. Oh shit, I don't know where that is. Let me go back out. All right, what's my rectangle I just got? Rectangle must be down below. All right, let me go horizontal ray. Oh no, I want to make these. Let me go. Oh, I want that. Oh, these are his. I got it. Okay, so these are all showing. Okay, let me pull back out. Okay, so these are his rectangles here. I think I drew a few in there as well. All right, so we've got this. So 1, 2, 3. Now let's zoom in here. All right, so if you're looking to play this on the short side, is there a struggle here to identify the Elliott count? I'm going to suggest not. 1, 2, 3, 4, maybe, right? So we're clearly hitting structure here. That's a little suspect. So here's what you can say. All right, this sure looks like 4 kind of price action as we just waffle here. We're not progressing the trend. We're not advancing it. We're not retracing really. We're just going sideways. So classic 4. So right off the bat, I just start labeling this up. I'm like, okay, 1, 2, it could be 3s in, 4, 5. Sure looks like a 4. Subdivision's a little tricky. 3, 4. Well, so you 1, 2. You'd have to go 3, A, B, C into the 4. You could be done here. That could be it. All right. So then you'd be looking here. Now this is a little tricky, right? Because they're all tagging. So you don't have one that's clearly, oh, there's the 5. So here, my thought would be I'd be looking for something like this to come back up here. Now you'd obviously be paying attention to all this structure that's on the left here. So there, just kind of see it here. Prior support, little resistance. Again, we don't want to ignore price action. It's not like we obviously always look left, right? Always. Whenever, if you have something to work with here, because this can be, well, let's put the whole thing together. Well, if this is going to be from the 2, right? We've got a triple bottom down here. I got to go back to, because now I get the 38. So look right here. So where's the most probable location for a 4? 23 and 38, right? So with a good 5-wave sequence, you don't want the 4 going that deep, right? Because it reduces the probability we get a decent 5, right? The deeper the retracement on the 4, the less potential there is in the 5. Statistically, right? It doesn't mean you can't get there. It's just you prefer it to be more shallow, right? The strength of trend, right? The deeper the retracement, now is this trend going to hold? That's why you want to see it hold in here at the 23 to 34, right? Again, be picky. So there's a first target. So if you're looking at this trade right now, it's like, I don't know, man, that doesn't make sense, right? We got this big event today. Everybody's going to be bullish. So maybe an option is a good way to play this, which I would guess is how Arixis is going to play it, because he's very comfortable trading options. So maybe something short term to look for that kind of a move, 151 to 147. Well, you don't need a monster run here. So a move like that, you could trade the weeklies actually, because you're looking for that reaction to come within the next damn near 24 hours, if not less. You're looking for that reaction, that counter. Because what is the public doing? The public turns on CNBC and they say, oh, well, okay, well, big event in Apple today. Well, I sure as hell don't want to short Apple today. God, all they're doing is talking about this big event on Apple. Right? Isn't that what the average investor is going to do? That doesn't mean, right, that doesn't, again, I could, right? But this is what I'd be playing for. So the swing here, what would you be anticipating here, right? If you get that 5 to complete, now you're just looking for that, right? And then you're looking for the next leg down. I think I got everything, right? So these, right? We looked at those little ones. We got all those. We got all this stuff. All that's in. Yeah. So I think we got it all. That's great stuff, Arixis. I'll be curious to see how you traded it. And I'm going to guess you used options. Okay. All right. Let me keep. I think I got through everything. I like that. That was a good way you did that, Arixis. Thanks for doing that. It made the storytelling actually all the better. Cool. All right. I'm going to keep moving here. Oh, I got Wu Wonka. Oh, he's giving me, I thought it was crypto. He's giving me Coinbase. Okay. So Wu Wonka, let me get that up. Right. I thought, how long is Wu Wonka? Hasn't been with us very long, but man, is he putting up some good content. Why? Because he's come in and he's all over the Discord. He really applies himself. And so he's learning. So he hears me say, I'd really like to see you guys, account for every wave. And I'll be damned if now everything he posts, he's accounting for every level in here. So this is a guy who comes in, he wants to learn, he applies himself, and he's active, right? That's how I always tell people, you want to get the most out of your membership, post like a mother. I mean, just post constantly. That's how you get feedback, both from me, from senseis, as well as other members. You post something in our Discord where you make a glaring mistake, they're not going to shame you, but they're just going to say, hey man, you might take a look at that because per the rules and guidelines here, that looks like it might more be an act. I'm just using it as an example. The idea that we don't allow that kind of shaming, right? We see anything like that, you're gone, right? But if you're offering constructive criticism, we want that, right? New traders need that. You need that feedback, right? The guy I worry about is the one who joins us and then he never posts because I can't help him. I don't know if he's getting value from it. The guys that are posting all the time, I know they're getting their money's worth. All right, let me make a copy here. This looks like good work. That now, if you just brought that up right off the bat, right, would you immediately think, oh man, I want to dive into that? Maybe not. All right, it's tricky, right? But if you're a crypto trader, you probably paying attention to what's going on with Coinbase. So while it's at first glance, you might pull that up and think, oh God, I don't hear. So you might pull that up and say, well, I sure don't see this, right? Oh, so I guess I can't trade it. Well, slow down now. Right. Look at the nice detail that he's put in here. So we have a textbook, like it's right out of Elliott 101. What does a leading diagonal look like? Right. It's made up a series of threes, right? 3 longer than 1, deep 4. Right? 5 longer than 3, right? Just a textbook leading diagonal. Well, so if that completes something, right? So we completed the leading diagonal. Could be an A wave, could be a 1 wave. Right? I'd lean more into the 1, right? Since we're just getting started here, right? But we do have something to correct. Here's the common, right? Hits the exchange straight down, right? I mean, shit, Facebook did that. Hits the exchange straight down. Why? Who would do that? Right? Nope. Institutions, hedge funds, they don't want to pay that price. If they can drive it down, now you could really simplify here and say, what's happening down here? Accumulation. Institutions, hedge funds, here's one thing they'll never do: buy the all-time high. right? So at that moment in time, that's the all-time high because they can move the market, right? So in comes a bunch of sell volume, like, oh shit, man, this was supposed to be the hot, right now, Bitcoin's selling off, let's hammer it. Let's hammer it. Now down here, what's happening? Accumulation. The public's already like, well, oh shit. Well, okay. Well, that crypto stuff. But look, Bitcoin's selling off, right? So yeah, I knew it, right? I knew it. Yeah, Warren Buffett told me, it was rat poison or whatever the fuck they were saying. Don't take advice in crypto from people over the age of 90. Okay, so 1, 2, 3, 4, 5. So I complete something here. I know I've completed. Ooh, I like the dotted lines, right? Nice touch. Nice Wonka, right? I think he's my candidate for most improved. 1, 2, 3, 4, 5. Now, if that's a 5 that's completed, what am I looking for from this moment in time? As soon as that starts, I'm looking for a 3. Now, if I get that, what am I in here? I'm going to take that up just to make the point. There's your money wave. Remember, you want to be a purple belt? At TradeDevils University, you got to prove you can do it in 3s and Cs. Right. So is this worth waiting for? Now, see, you don't have to take this, say, hey, I got the beginning of the 3. No, that's not what we're trying. We would be just as valid to get the internal 3 of the 3. Right. Here's a potential trade here on the short side. Right. We want you to trade the Cs and the 3s. Right. So here's the C. But look, that's like what that looks like. I got to switch this over a little bit. Can I do that? You might have it locked. Yeah, he does. Okay, let me scooch this over. Oh, shit, not that. Can I get to that? I may not be able to. Oh, fuck, I can't do it. Okay, so here, I was trying to show you this in here, all right? But this is blocking it. So it looks like it's 1, 2, 3, maybe that's 4, looking for one more down here. Now, look how nice this is. So you're down here, you're at the prior support, you've completed the 3, right? And if you're patient, you wait for the A. No, so here's the A. I got a nice 3 into my B. Remember, in a B, right, they are always trying to go get those stops. If they can't get them, market's talking to you, rolls over. Right now, longs start getting stopped out. That adds fuel. Then eventually, here's what the public does. After all that, because they're not considering the context here, they'll sell it. Well, I guess we're going to, shit, it's going down. Looks like it's going to go break the lows. Hey, look at all the money I can make if this goes down and we take out the lows. Well, this is heads up here. This is a great looking trade because there's a lot of muscle here that's likely to defend down here. So even if it does break down a little bit lower here, you come into this support, guarantee is the wrong word, but you're likely to see a fierce fight down here from bulls because they've accumulated down here. Accumulation has taken place. So they're going to be aggressive coming out of here because now you're coming into their zone. So expect the defense, which is why this is all potentially set up to play out just perfectly. A, B coming down for the C. You're expecting the reaction, right? Now, again, there's no certainty, but boy, is that a great looking setup. So, but be patient, wait for this 5 to complete. We got to finish with a 5. This is on a 4-hour. Looks like the 1, 2. All right, 3, maybe, right? Could be the part of the internal 3. You don't know for sure, but be patient on this. There's no reason to force it. I'm going to just take that off. All right. So one more scoop down here. So do you see how he's got this set up? Right. So he has a plan. It's not like, well, but let's jump in. Right. He's done all this detail work here, all of this analysis. So when it comes down here, he doesn't have to stress over it. Okay. I've defined my risk. I know the pattern. The pattern's coming in right where I was looking for it. We've even got a 23.6 here. So where's he getting? Oh, I see what he's doing. So he's pulling this. Looks like he's anticipating we'd come. Shit, where are you getting? Oh, wait a minute. That's off of this low. I see it. Okay, so here it is. There it is. Okay, so right now we're just coming into the golden zone. See this little front run. Now, what's interesting here is that you're going to have to make the anticipation for the buy down here that's going to break the golden zone. That's the assumption. Now, you'd have to be careful about that because if this is going to end with a little, see, where 5 is shorter than 3 and 3 is shorter than 1, like, oh, it's hard to tell. It looks like 3 would be longer. So you might get a little push down here that would give you the 5. So I'd be careful, Wonka, here of anticipating the break, because that could very easily hold. So you might take a portion of it here. If you get the push down lower, then you could load, because now you've defined your risk. So here he's taking it all the way to the low, on the assumption here that the accumulation here, they're not going to let it get that far. They're going to fight it out of there. Now, it doesn't mean that it can't. It just means you can anticipate a battle down here. But I'd be careful about anticipating the break there, because that's your lowest low, right? So if you get this, right, it looks like it's working on it. If I didn't take all of it, I'd take 50% there, because you don't want to assume that that's going to break. I'd assume that it's going to hold. Right, you're into this nice support here. You're halfway into the middle, right? I mean, here's the 50 of the zone, so you're already 2/3 into it. There's going to be a battle there. They're gonna fight for that. So I like the setup here in terms of the swing relationships here and anticipating the deeper. Oh, the other thing I think you'd want to be mindful of, which it looks like it's in here. I don't spot it right away. That may be what he's targeting here. So this would be the 100. Well, the 618 is already broken. So if we get to the 100, which is the most common C length relative to the AB, oh shit, you probably have this in here as well. All right, no reason not to do it. Now oh shit, here I got to get mine so I can recognize it. Now, all right, so there you have the candidate here for it to get, because you do have your 80% odds. But because it's a correction, I always start with shift, right? So I'd be looking here for if it's going to break. Well, essentially it lines up the same way. So the shift is I think better suited to a correction. So because you're assuming the correction, if it breaks the golden zone here, well, now you're coming into the 707, right? You'd want to look for some sort of reaction to come out of there. You don't necessarily have to take that turn, right? You could do that, right? But right in the pocket here, if anybody's looking and you don't want to, well, I mean, this is a way to work into the crypto space with a traditional asset, right? And this is a lot of support should be down here. So that's one that I would absolutely, in fact, I'm putting that on my radar, right? Which just means essentially all I'm doing is putting it into a watch list. I'm going to set some alerts on it. When it gets into the golden zone, I want to heads up, because that's a nice looking trade right there, right? Just the first target. Now, if it got there, would that be the 3? Probably not. Right. So look what he's got here. Take profit 1 at the algo target. If it turns into a 3, this is good work, Wonka, right? So if it turns into a 3 and we get this, right? Oh, gets a little reaction there, right? Where would you be anticipating maybe a little support for the 5, right?
On arithmetic, it's in the golden zone right now, looks like.
Oh, is it? Oh, shit. You know what? I forgot to change out a log because it's from Rixus, right? So, yeah, all the better, right? So now you just tapped it. So as we look at that, it doesn't look like it's quite done, does it? Right? So it looks like 1, 2, 3, 4. So you might get your break. You might. 1 looks like that's got to be your 2, working on the 4. Now, we know an algorithm's participating here. So again, that's why I'd be careful about assuming that it's going to break. Don't assume it holds. So, oh shit, what are we on, a 4 hour? Let's go down to a 1. Maybe we can get 5 out of that. I don't think so though. You can't do it there. Tricky one. So that one to watch. So it'd be hard to, so there, you don't have a 3 here, right? So either you have to change your account, you don't have a 5 here. So you either have to change your account to accommodate this, right? For the idea that we're going to come out of here, or perhaps as you've got it teed up here, there's the reaction. Right? He's trying to get in down here. If it doesn't happen, okay. Next trade, right? So if it doesn't happen, right, is all lost, right? So if you get the reaction here, at some point there's likely to be a 1-2, because if we get the pivot here, it's likely to do that. Because the people that get this, the temptation will be there to take that profit. That's what causes the 2, 3, 4, 5. Right. So good work. Thanks for that catch, Monty, because I had changed to log from the previous one. Just out of curiosity, since we had it that way. Yeah. So here in the traditional, failure to get there would be a tell, right? So if we can't get to the median line, all right, market's talking to you. All right, good stuff. All right, let me keep moving. I got XBT from Volcker. Okay, so how are we doing on time? Okay. Okay, Volker, XPT. Oh, Platinum. Yeah, he's been tracking this, as I remember last time. He wanted to see something on Platinum. So this has been all over the place. So here's a daily. All right. Looks like, well, so one, right off the bat, I like that he's trading on these higher time frames here, because this, look, the range here is pretty substantial. So 1, 2, 3, 4, that's, you know, kind of a cluster. That's just a little bit of sideways fuckery right there. Then 1, 2, 3, 4, 5. So we get it done. All right, so let me get in here. So we get an A, we get a B. Oh, pardon me. We get a W. So he's going A, B, C. A, B, C. Looks like, oh, that's a bit of a scrunch. Might be here. Either way, we can play that as an X. Into, we get, looks like it's a modified shift. Okay, so let's come down here. All right, how's our context here? I'm going to change this just so we can see it better. Okay, so we got a candidate here. I'm going to tighten that up. I locked it. All right, now lock it. Okay, swing for the A. 3 for the B. All right, pretty. Right, when you can, first thing my eye always goes to is where are the threes, right? Where are the threes, which will help me define the fives. So here's a 3. So looks like that's more impulsive. That certainly doesn't look like it's just a choppy 3. That looks like an impulsive move with a kicker in the 5th, then 3 to correct it. Now that looks like it's about maybe a 50. All right, so we're at the 50. So we get a corner pocket. All right, so I mean, I can only show this so many times, but hopefully it starts to sink in. There's our 80%. All right, now you don't know, could have gone to the golden zone, right? But this one pivots, that's 50 to the tick, right? Gets to your 80% is hit, realized. Now, down. I'm assuming you guys see that. This 50 has a target right here, right? So that's likely the front run. If not here, they hit it to the tick. All right, so looks like we go 1, 2, and that, so he's got an internal triangle in there. So he's going, looks like 1, 2, what is he doing? 3, 4, 5. Okay, so he's putting the triangle in the 4, the 5. It looks like, yeah, he is right there. So here's his 3 as we hit the algo target for the second time. So I've got my 3 in here at this degree. I'm going to raise it up just to make it easier to see. Okay, so 1, 2, 3, 4. Okay, now we come for the 5. All right, what are you thinking here? Okay, so coming off of this, he's going 1, 2, and we're in the 3. He's got his target down here, which is our high probability zone, 1618, 175. So he has, this is a trading campaign. So he's identified where he wants to, watch for the completion of this move. Now, you could make a case here that there's a reasonable short to go down for this 3, 4, 5, but it looks like the trade he's looking for is for this to complete. All right, let's put it all together. Okay. Oh God, I gotta be able to see what's that big line? Oh, I gotta go weekly probably. What are we doing here? Okay, so now we're getting context. That's the trend line from the B high. Okay, so this is something you'll see often with trend lines is they get tested, right? So here, right? So he's banging it here. This just wick. So interesting. So this is, I can tell what he did here. He did a little trial and error to see which one of these was going to play better, which one seemed to be responding to the market. So if it's not the top one and the angle's too steep, then you go to the secondary pivot. Note that's all wick. So this again, all wick, nails it to the tick. Right, nails it to the tick. Here we get through. It's the first glimmer of, hey, perhaps this resistance is prone to breaking. So which you'll see. So here's the first. Oh, can we get through? Nope, rejected. Now we get even there. You see what happens here? They break it. They break it. So failure, 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 failure. They break it now. Is it safe, or is a bunch of supply going to come in? We good? Let's test it from above. We're good, right? So that's why I'm going to always tell you, don't take the break. wait for the retest. Right there you got it. And it looks like you got another. You had this right there, 65. Third target on that one.
Volker messaged and said, context, check the weekly.
That's what I'm on right now.
Oh, gotcha.
Yeah, because I saw the giant line and I didn't know what it was first. So because we have a 30-second delay on this, he hasn't probably seen it, right? So here's the ABC into the first. Here's my X. Then, this is tricky, right? Nice work, Volker, here. This is tricky, right? So this takes a little Elliott skill, right? You've got to know what to look for. Now, does that work? Can I have that? All right, rules and guidelines. Essentially, right? There's complexity here, but what are we doing here? We're just going sideways. All right, when you see that, right, and then now you're thinking, okay, so this looks like a series of threes. It doesn't look like I've got good. Even here, because looking at that, you might have thought, 1, 2, 3, 4, 5, right? But I need a 3. Right? So what he's doing is completing the 5 here, because now we are on a weekly, so down on a smaller time frame. So to get the count to work, he's going A, B, C into a W, X, Y, right? Gives us, so the double gives us the B. So while there's a lot of complexity to it, it's this, right? He's anticipating that, right? Which is, there it is again, right? It's a different shape, but that's all the market ever does, right? Swing, retrace, one side's going to break, right? That's just as simple as it can get. A little tricky here. Okay, no triangles in a 2, so that looks like that's so he's working a diagonal there. So we can't call it a triangle. So we have to go 1, A, B. Oh, that's what he's doing. Okay, so here's how he's doing it. He's going A, B, C into that via that ending diagonal to get us to 2. So this is very tricky work. Right? It's good detail work. Down for the 3. Looks like that's that looks like it might be the 1618. So 3. Now we get kind of this is ugly, and this is not easy. So at this point here, you might have thought 3, 4. You might have thought it was done. Right. So this very high probability that bulls got stopped out here, because it would have been very easy at that time to think this, right? Very easy. Well, I'm getting a choppy start to it. Well, then you get that. So then I wouldn't be surprised if Volker was thinking the same thing right there. Oh, looks okay. It looks like I finished it here. I didn't get much of a 5, but it looks like I'm starting off. I'm coming up. Oh, and then you get this, right? So immediately you got to go, okay, if that's not the low, and now look at what's coming off of this, if this has to be my 5, right? Because no longer can this be my 5. So this has to be my 5. Well, does that look right? No. So now what he's doing is saying, looks like we got to do it this way. Unusual, but it's essentially, it's a 3. Expand the B, 1, 2, 3, 4, 5, ends with a diagonal. Here's a clear 3, right? It's context. Right, it's nice work, Volker. Right, so you're just forced into this, right? So, there's the reality of trading, right? Well, nobody saw that coming, right? That's just a big, shit. Right? On a weekly, might have been, right? So once we start coming down here, there was the likely news, I'm sure. 1, 2, 3, 4, 5 up. So I got a candidate, right? Nothing more. I got a candidate for a completed 1. It's a little sloppy here, it's a big rip in the 4. But based on what's here, let's go back to the daily. Oh, that's getting a little crowded in there. Let's see what we can make of that. 1, 2. So you remember, you got to account for the way to define the 3. I've got to be able to get an impulse in there. If I'm not going to overlap the 1, I got to get a 3 in there. So he's finishing it down here. Well, it looks like, so right off the bat, here's your 80%. Right. So has there been a chart we've looked at today that didn't have that? No, there hasn't. 1, 2. All right. First thought would have been put the 3 here. Likely he did, right? I would have think, shit, right to an algo target. Okay, 3, right? Doesn't work out, right? Because now it goes up and then down again. We get a new low, so you got to call it something, right? As we get to new lows now, as we sit here, 1, 2. So he's got the 4 in. So the 4, right? This is how you helps identify a 4. What do we do here? Just going sideways, right? Classic 4. It just helps you go, well, that sure looks like a 4. Okay, can I work backwards? If that's my 4 and I'm going lower, can I work backwards? Yeah, I can. All right, so if we're not gonna pivot, right, we're gonna hover on one side, the other side. Now we're back to the median line, right? So it's like a magnet to the market, right? It will, until you break beyond, it will continue to be a magnet to the market. Now it looks like the implication here is that if it's 1-2, well, he's got this target down here for his 3 right at the 1-6-1-8. Not unreasonable to think the market will push back towards the median line, give us the 4 down for the 5. So this is not quite ripe in terms of where he's looking for it. So he's just, at this point, just waiting for that to complete. He's looking for that completion. So the A, the B, and the C is going to complete to give us the 2. So here's the 5. So this would be 1, 2, 3, 4, 5, right? Which works. 4 bigger than the 2, but essentially it's just the complexity here. The 2 is a little, again, Elliott's not perfect, but we can make that work. 3, 4, 5. So you're down here waiting. Now, note he's not looking to buy just to pick the turn. He's waiting to say, okay, if I get a reaction down here, rather than try and pick the turn, right? Because I don't need to be a hero. Show me that you're going to come off of this with a 5. And if I get a 5, now I know right where I am. Right. It doesn't mean that this is guaranteed to go, but I can complete something here. I'm completing it in context. Now, look, you'd be coming back to test that big monster trend line again from above. But again, I'm not trying to be a hero. I'm just going to wait for the reaction. I'm going to take the retrace. And now I'm into the 3, right, which is where you want to be. All right, so it's a very well thought out. It's great work, right? So he went through all that detail. If he's been tracking this, looks like there's a few spots where it would have been very easy to get stopped out. I don't know how long he's been trading, but he's been posting this for a while. So I think he's been trading it. So my guess is he's had to deal with some of those irregular or the unexpected kicker, right? Like this one was, right? This one was unexpected. This is a pretty good reaction to that. Now, if we come down here, don't be the hero. You don't need to be. Wait, boom, into the 3. Good work as usual. Okay. What's my last one? Okay. US oil. Okay. So I got CZA, copy link. And let's give that a minute to come up. CZA is using our squeeze indicator. Come on, baby. There we go. Okay, so this is always very useful to help identify potential squeezes, just contraction of volatility. Ooh, this is nice. Ooh, good looking work, CZA. Okay, so this is US oil. So this is the CFD. You can trade this with your FX broker if you don't want to trade with the futures. With the advantage here, well, I think there is. There's a micro now in crude if you're a futures trader. But if you prefer to trade where you can choose micros or minis in oil, you can go to your Forex broker and trade the CFD. All right, let's see what we got here. Oh, I got to make a copy. Sorry, hang on. All right, so right off the bat, just looking at that, I mean, it sure looks like this, right? I'll say it over and over again. That's all the market ever does. Right? So we got all this complexity in here. Oh, ABC into a W, X, or one could be a 1-2. It really, at its core, that's all it did. And then all of these, I mean, again, it's just the same thing over and over again, right? You see, just your eye should be just, okay, same thing over and over again. Connected by, and this little one's a little skinny. Right, but there are all sorts of, you're going to see this, pardon me, you're going to see this, you're going to see these, you're going to see this, you're going to see the perfect golden zone. But at the end of the day, you got 2 pivots, one side's going to break. So this is good Elliott work in here because now looking at this depends on when you pull this up on your chart, right? If you're over here, you might have thought, oh, hey, well, 5's in, the correction's done at the one here. Oh, I want to be a buyer. Well, did you have a bad trade experience there? No. Did it turn into the 1, 2, 3, 4 that you might have been looking for? No. Right. As is often going to be the case. You would have no way of knowing, right? You'd be here saying, oh, fuck, man, that's beautiful. Oh, 5 there, 3 there, 5 there, boom, the correction's done. Now, maybe, right, in context, you pull that back and say, wait a minute. That's on a 30-minute. Let me go out to a 4-hour. Say, where am I in the that's why context is important. Okay, where am I in the context of all this? Well, oh, wait a minute. Now, it looks like I'm in the middle of a big rip-roaring impulse. So if this is the impulse that completed up here, that little ABC is not likely to be correcting the whole thing. So then all of a sudden he's like, oh, that's what he means by context. Because if this is going to correct to where you'd anticipate it, shit, I can't even get, that's his low. Okay. We certainly aren't going to be anticipating that oil is going to correct. We're not even to the 23, right? So he's highlighting this here. It looks like that's more price. Well, I'm not sure. Wait, I'll have to read his comments. But it would be unusual for the market to only correct to the 23 after that gigantic. Well, shit. Would we go from zero? Right? We know crude went negative, but we're going from zero to $76 a barrel. Right? That's the infamous line. What's the cure for low oil prices? Low oil prices. Right? They're not going to stay there. It's just a $70 move. Well, all right. So where's the most? Look, do you see? Again, it's well thought out, right? This is what you want to aspire to. Okay, I've got a completed impulse. Well, I'm anticipating that if it's going to follow patterns that we know repeat in the market, I'd anticipate a retracement. Maybe it doesn't make it that far, right? So all of this is going to be here as potentially support. So maybe it only makes the 50. Pull this down a little bit. Maybe it only makes the 50. But right now, what is he targeting? He's targeting the A wave. He's not targeting the end of the correction. He's just trying to work in the correction. So let's zoom in there to get a little bit more detail as to what he's thinking. Okay, so one, I like how he's got all this detail in here because this is, you get down to the nitty gritty here and it gets a little tricky. Okay, so we got two possible scenarios here. One is that we're just getting started on a deeper correction. So it would be 1, 2, 3. Now, could be the 4. So we'd have a big leading diagonal. Now, how could you lean into that a little bit? Well, I've certainly got a 3 here. I got a deep 2. You could certainly call that a 3. I could do this, right? So a leading diagonal is to look just like this. So what's the requirement? The 5 must be longer than the 3. So that right there, right? So there's a little application of Elliott that where it's helping you. So you say, if that's going to complete as a leading diagonal, I know this has to be longer than that, or it's something else. So if I'm trading off of the idea that I get a leading diagonal, then I have a target here. This has to happen or something is not right in this analysis. Just that alone is a huge benefit. That's why it's worth incorporating that, because you could trade this without the Elliott. I think that would be why. If you can add more things to help with the precision, with where the decisions need to be made, why wouldn't you do that? Price action is a lot easier. There's some support here. Well, it looks like some resistance up here. It's easier. If I thought it was better, that's all I would teach you. I know it's not. It's just easier. Doesn't mean you can't be profitable. Decide, right? What kind of trader do you want to be? How hard do you want to work at it? Because this, you don't, like as I've said this before, you don't kind of trade Elliott. You're either all in or you're all out. Now, there are times, right, where it's just like, God damn, you can't miss the 5, right? Or the 3. But, if you're doing that, then maybe you think, God, maybe the 5s and 3s are something I want to pay attention to, right? Then you take a little deeper dive. Whoa, man, 5s and 3s, right? That's easy. But what about all the 24 corrections I got to learn? Well, you're not going to learn them all at once, right? And you're going to have to experience them. And that's why we create those cheat sheets. All right, so let's get into his detail here. So this is our last one here. How are we doing on time? Holy shit, we're already at 2 hours. Okay, so come here. Let me zoom in here and see what he's doing. Okay, this is some detail work. I'm going to go to the 2 so I can get into all of this. Oh, man, CZA, good work here. So look, every little swing accounted for. Right. So you can just look at this and say, God damn it, look at the work he's put into this. Because I promise you, just starting here, that's not easy to do. Oh shit, what is that? Oh, it looks like side. Whoa, there's a triangle into my 3. Can I get the 5 to finish? Right. So everything so what's the point of doing all that? So he gets through all of this, right? He has so much conviction where he is because he's made sure that he can get this to work, right? Can this follow rules and guidelines to get me to a B wave here? Yep. What am I anticipating, right? Right. If this is the correction, you got pretty right. Well, here's, I'm not saying don't look at price action, which is simply just support and resistance, right? I mean, come on, we can make it fancy, but at the end of the day, that's all price action is. Right, but it's certainly a lot easier. A, B, that's tricky, right? So then he has to do the A, B, C to make that work, right? This is very tricky work in here. Now, I'd be down even lower than that to try and get all that little nuance. So nice little 1, 2, 3 sideways into the 4, little pennant. Now we're going up here. That's not great looking finish. Let's see where we are. Well, one thing right off the bat, you see how the geometry is coming into play, right? So candidate here could be the 4, right? So we looked at that. Could be the diagonal. It could be the larger. Big 50 from the all-time high. So if we're to break out of this, that would be significant, right? This would be your next target. We know that'll be a magnet, right? His algorithms will participate there. So this is a tricky one. So let's look at both of these. If it's WXY, then we're working on the X here, right? So the anticipation is you get a triple. So we get ABC, 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 right? So we get a triple. Right, so we get a WXYXZ, right? Would that make sense here? Well, this looks like you can get your ABC here. So he's got his A in, right? It looks like that's all pretty tight. Now you do have a shallow B, right? That's the one. Again, Elliott's not going to give you perfect shit every time, right? So you just got to work with what the market gives you. Okay, well, could that be my B? All right, tricky in there. So thus, because this area here is a little unclear, thus you can see he's already recognized that and saying, oh, certainly could be a couple of different things here. So it could be the X, could be the 4. Let's be prepared for either. Now, my guess is he'd have this split on 2 different screens so that you're not, because I find that confusing when I'm going, what was I thinking here? I like to have one count on one screen. I just split the screen and I put the other one on the other side. So I don't get lost in there, especially with this kind of detail. Split it in. My suggestion would be split it into 2. I think he does it here for me since I'm going to pull this up and I can see his thought process rather than give me 2 charts. So what he's working on here is this shape. So he's thinking A, well, that's a skinny B, into the C to give me the A of the X. A, B, C, A, B, C to give me the B. So he's here. Now we got this A, this B, and this C. So there's the 3. And now we're pushing up here, trying to complete something up here. Now we could have completed right there, which wouldn't that be just interesting right at the geometry? I would not anticipate, I would not assume, here, let's bring this back up. I would not assume that that's going to hold. That that's going to break. I would assume that's going to hold, right? It's resistance for a reason. Right? Boom, 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 boom. Okay. I would anticipate that holds. So the event that's significant is not that it holds. The event that would be significant is that it breaks. Oh, it broke? Boy, that's pretty solid resistance here. What would be the next target you'd look for? Well, there's the major 50 from the top. Still a good, right now here you're getting pretty close because the 4 can't overlap the 2. So now you have a point where you'd say, okay, I know it cannot be a leading diagonal anymore. So you get a process of elimination. Oh, okay, well, I can take that count off. Well, so, okay, now it's most likely the X, right? This one goes away. Doesn't ruin my day. If anything, right, all I've done is make it easier for me to trade because I'm not trying to factor in 2 possible scenarios. Now I'm down to 1. Assume it holds, right? Don't assume it breaks, right? So you're still, at this moment in time, you're still stuck with 2 possible scenarios. So how do you define it? Well, what's going to come off of here? Either way, whether it's the 4 or the X, the anticipation is, right? So per all of this work, now this is a little, That's not the best setup I've ever seen. So you're more influenced by the geometry here than you are the beautiful Elliott count. So the geometry is the key here. Now, additionally, look at the momentum divergence here. So even though we get a new price high here, look at the difference, right? We're losing momentum. Now, so for me, if I'm looking at this, I would not take that. I'd be taking. It looks like I'm not sure how we would approach this. I want that because my stop's right here. I could certainly go up here and get that 50, right? I want that one. Followed by, well, my free draw is not great there. Something like that, right? So I can define the risk. I can say, okay, right there. If I'm going to take that retrace and I'm, again, look left. Okay, well, so that might be an area, prior resistance. Oh, we got through, right? And we went up and tagged the geometry. I'll pay attention. So, you kind of see the head and shoulders potentially in there, right? That's all an A, B, or in 1, 2 is, right? It's always, it was called head and shoulders long before it was put into an Elliott context. Okay, so there's my right shoulder, left shoulder, maybe, or could be either one of those. All right, but here here's my head and shoulder and maybe, right? We don't know what that looks like. Might be something like that. All right, get us down here. All right, pretty good geometry. So really that's your keying off of that, the momentum loss and the key and the fact that the count would work here at that geometry. Now, that doesn't mean sell it there. For me, right, I want to see the reaction. So I would just be looking in here going, okay, where are logical places for that initial support to come? Right? I'd be looking here, resistance, right? Got through, resistance, come back down here. Here you can even pull it over, right? Even more. All right, this was significant to the market. The market's reacting there. So somebody's long or short there. They're defending or they're adding one or the other. There's likely to be a reaction there because there was a reaction there previously. So if I get the kickback here and they can't get the high, right? Same story, same thing, right? If they can't get the high, because they'll be after it, right? If there's any pivot, right, they're always after, right? Because there's fuel there. If they can't get it, down it comes. Oh, I think then these guys, right? You have to think about what's the guy on the other side thinking? Well, he's thinking, maybe we do this way. He's thinking, oh, I see what's happening here. Pull it back. I don't always get him right on the free draw. He's thinking, oh, ABC. Oh, wait, swing right here. Right here's welcome to trading. Right, he's thinking that. What is the other guy thinking? Right? Ask yourself that when you're going into the trade. If you're selling it there, what is the guy that you're selling it to thinking? He's thinking that. Right? You don't need to take that extra risk because he may be right. What's your first thing you have to accept in the markets? You're going to be wrong more than you're right. You have to be at peace with that. You can't fight that, which means I'm sure as hell going to put my stop there because I don't know that can't happen. It gets here, right? And I start to move away from it. And I get here. Well, I might tighten up my stop a little bit because you're making the assumption here that this pivot is good and this pivot is good. If it comes back at you, well, then something's wrong. Your assumption was incorrect, right? Because each pivot, right? You're making an assumption at each pivot. I've got the 1, 2. If it doesn't give it to me, then my assumption is wrong. What's my first assumption? I'm wrong more than I'm right. So why do I want to stick around here? Because that could happen. Oh, shit. Okay, small loser. Fuck, right? Nobody likes it, right? I don't like it. Still 30 years into it. I'm like, God damn it. Right? It's just, I have the same reaction you do, but I don't freak out about it. Okay, all right, well, what else is happening, right? Could be going here. Or where am I now? I'm at the 50. Do I want to sell that? Not necessarily. What would I be interested in? That one. Because my assumption is that this is the pivot high and this is the failure swing because they can't get the stops. Right, so I'm making 2 assumptions here. That's the pivot. This is the retest that fails, and that's what gives it fuel to keep going. Right, in neither of any of these trades have I allowed the market to knock me out. Right, I'll take a jab all day long. You get it in the ring, you're going to get hit. Right, so don't stops. Nobody likes them. You turn it into a positive. You heard me say this many times. Well, stop's doing its job, keeping me out of trouble, keeping me from blowing up my account. Thank you very much. Next trade. All right, I think we got everything covered there, Money Crypto. What do you think?
Yeah, looks like we're good to go.
Okay. All right, guys. Well, I go over a lot of things. Hopefully that repetition, it starts to sink in to where you start to see it. And then, you pull up a chart and you'll start doing it the same way, going, okay, what'd the algorithm do last? Where's the geometry? Are there median lines in here I can work with? Oh, maybe it's a channel, right? This looks the classic channel. Is there an Elliott count? Well, I got to sharpen up my Elliott skills because I'm not sure. Wonder where I could do that. TradeDevils University. Okay, guys. Thanks for watching. Appreciate your time. We'll wrap it up here. This is recorded, so when anyone else can watch this, at their leisure. I hope it's helpful. We appreciate you guys sticking around, and we'll wish you a good day of trading.
Yeah, and we'll see you tomorrow for Monty Wednesday.
Yeah, pardon me. I forgot to mention that. Yep. Tomorrow you'll get a very different look at it, right? It's all based on the same ideas, but just some unique and very, very unique approaches to geometry and fib swings, right? So well worth your watching, right? Okay, guys, have a good day.